Recipes for technical trading success in Cook's Kitchen.
Who's afraid of new highs? I've got 3 stocks and the investors who love them who definitely are not afraid of new highs. I created a screen, as I like to do, and it's got 5 criteria. Let's take a look. So a screen for new highs implying, hey, we want to find stocks that are strong. What would be the criteria of buying a stock at its recent all-time highs? How about a Zacks rank of number 3 or better, and a Zacks growth score of B or higher? Throw in a decent PEG ratio so we get a reasonable valuation based on that growth rate. And finally, strong institutional demand. As you probably know, I love to watch the whales who are buying stocks, studying them and the reason they're buying stocks, and I especially love it when they're buying stocks that I own or want to own. All right. First up, coming through the screen, Avago. Hit an all-time high on April 13th. It's a Zacks number 3 rank right now. That's going to happen sometimes. You know, they can't all be number 1 and number 2 ranks. You know, when you want them to be. It depends on how the earnings estimates are cycling through the quarter. Broadcom is actually the name of the company now. The symbol is still AVGO. They report next week. I haven't seen any analysts raising estimates into the quarter, but I expect it to be another strong quarter, and we could end up a rank 2 or rank 1 after that. But let's get to the other details here. Growth score of A, so that's huge. Look at that PEG ratio. Not under 1, but it's nice for a large cap company. And there is definitely strong institutional demand. Maverick Capital, run by Lee Ainsley. He was a Tiger Cub. Been running his own money since '93, under $10 billion in management. He quadrupled his position in Avago shares. Broadcom is the name. I still call it Avago sometimes. In Q1, quadrupled his position from like 200,000 to over 800,000 shares. You know, this is a guy looking out 3 to 5 years. He's not worried about the Fed. He's not worried about, this or that with the economy. He's not worried about Europe or China. He's got a long-term thesis on a company like Avago, and that's why he plunked down a lot more money near its highs above 120 in Q1, just as we did. Full disclosure, I own Avago. Okay, next up, Facebook. An obvious pick, all-time high a few weeks ago. It's trading around 119 now. And so let's look. Zacks number 1 rank. Obviously, the earnings momentum is there after their last beat. Growth score of B, solid. PEG ratio 1.4, nothing to complain about there. And strong institutional demand, of course. Facebook is like Apple was a few years ago. Hedge funds have to own it. They don't want to be left behind this growth story. I missed the train. I wanted to buy it at $70 last year and didn't pull the trigger. Own it now. And I think it's one, this stock will see 150, probably early 2017. And, so why do they have to own it? Because of what Facebook is able to do with its billion-plus users. They're going to find ways to monetize those eyeballs, and especially with mobile and selling the advertising and whatever else they can figure out how to do. They've got a captive audience. They're going to monetize it, so you still own Facebook, even if it's trading above 35 times forward. Okay. Ulta Beauty just knocked it out of the park yesterday with earnings. So here's the new all-time high today. Go over a few of the details. Zacks number 2 rank right now. I expect that to go higher after the estimates go higher. Those will get filtered into the Zacks rank by early next week. Zacks growth score of A, that'll be maintained, I'm sure. PEG ratio is a little high. Yeah, it's a pricey stock, and it will be pricier. And strong institutional demand. I'll show you some of that coming up. Now, Ulta, am I saying run out and buy it here at $235? No, and I don't own it. But you want to buy the pullbacks. And this has been the story with this stock for the past 2 years, is that you buy it into new highs because they continue to execute. The new CEO, Mary Dillon, well, she's not that new, but just continue to execute on their strategies. I didn't listen to the conference call, but I talked to a couple people who did, like our own Tracy Reinick, who owns the stock personally, has owned it for some of her portfolios, and she wrote about it for Bull of the Day in early this month because it was the #1 rank. I wrote about it in March after their blowout quarter, and the stock gapped higher on another strong quarter. So this growth story is being recognized by more fund managers, and I'm actually surprised when I look at the institutional holdings, who owns it, that there's not more big names piling in. But I'm going to show you a few of them coming up in a minute here. So what were some highlights from the quarter? Well, I got a bullet list here, but some of the things that stood out is their loyalty rewards program is just phenomenal. I think they're setting the standard now in retail for what a loyalty rewards program should look like, what it should accomplish. Like 80% of their sales come from loyalty members. So, you might have a loyalty thing at a Walgreens or a CVS, you're getting the little perks here and there. But Ulta Beauty, which is the name of the company, not Ulta Salon and Cosmetics, Ulta Beauty now, they know how to make the rewards program work to keep their customers coming back and winning new customers. One of the quarter highlights was, I think they talked about Mother's Day. And, they're going to have these seasonal promotions where they can boost a quarter. But I still think that Mary Dillon's strategy is always long-term. How are they capturing new customers for life, so to speak? Okay. So let's look at the beautiful quarter. Net sales up nearly 24%. Comps, 15% growth. Comps were 11% growth a year ago. And so that's just incredible growth. SSS, same-store sales. Comp, same thing. Driven by 11% traffic growth and 4.2% growth in the average ticket price. Salon sales are increasing, up 15%. That's nice to see. E-commerce grew 39%. Gross profit, nice to see that. 13 new stores. They're not building them quite as fast. I think they're being more selective and looking at going into more urban areas. I know there's 2 stores, in the heart of Chicago. I don't know if they have any stores in Manhattan, but that may be the thing they try next. That's what Tracy tells me. They use a lot of real estate. They're in some strip malls. They don't like to be in the big malls. They want to have a standalone store, so to speak, where they can put on their whole show. So they're experimenting, and I think they can afford to experiment now. Operating income up strong. Net income, just a beautiful quarter. I suggest you listen to the call if you can, or read the transcript and see how they're executing, and then decide if you want to buy the next pullback in Ulta shares. Now, I just looked at a couple of research reports this morning. Jefferies raised their price target from 180 to 215. So even though they love the beautiful company and the beautiful quarter, they don't want to buy the stock at 235 either. It seems like, they're behind the curve, raising their price target to only 215. Baird, on the other hand, raised their price target from 225 to 255. So they're not afraid to express their optimism. Let's look at who else is not afraid of buying new highs. Here we go. Let me find. There's my chart. I should have had a chart ready, and I don't. So we're just going to use stockcharts.com. I've got a 3-year chart here. So who was buying Ulta? Let's get back. Look at me pulling up, hitting some ads. That's a funny thing. That was one of my reasons I didn't want to buy Facebook over a year ago when they first started to report, earnings and mobile ads getting clicked on and that kind of thing. I wasn't buying it. And the reason I wasn't is because I thought people on their phones are accidentally clicking on these ads, and Facebook's getting credit for that. But a year later, it's turned out the strategy is actually working. Okay, so back to Ulta. So I want to talk about buyers. Let me just read off a few here. Big buyer in Q1 was Royal London Asset Management, obviously from the UK. They have a strategy. They're buying a lot of U.S. stocks, and they're pretty conventional. Some of their biggest holdings are Bank of America, GE, Ford, Pfizer, Cisco. But they bought 2.9 million shares. They have a 4.5% stake in Ulta. Also in Q1, Capital World Investors. They're a big under-the-radar asset management firm that you never hear of, kind of like a Wellington, nearly $500 billion under management. And they bought 1.4 million shares. They have a 7% stake in Ulta. And now total, because they own a total of 4.5 million shares. And then the guy I really want to talk about, Steve Mandel from Lone Pine Capital. This guy has played this stock masterfully for the past couple of years. He actually sold a little bit in Q1. He sold 200,000 shares, but he still holds 3.3 million. And he's at the end of 2014, he held about 3.4 million. So here's a guy. I'm going to just show you what he's done. So let's look here. At the end of 2014, Steve Mandel of Lone Pine Capital owns 3.4 million shares. What does he do into this ramp in the first half of 2015? He sells a little bit. He's selling like 1 million shares into this rally. Beautiful. Well played. Then we come into the second half of 2015. Stock's going sideways. There was this weird blip. I think this was this was the August nonsense where, computers went haywire. Algos, took the QQQ down to 80, Apple down to 92. So that was Ulta's blip. So kind of ignore that. Hopefully he didn't sell any on any stops there. But what he actually did is he was a buyer here. He bought about 1.3 million shares between Q3 and Q4 2015. So here's a guy buying new highs. Why? Steve Mandel is a smart investor. I followed him in many stocks. He looks at consumer trends. Right now he's really focused on the internet, but Ulta, as you can see, has a significant internet business that they're growing too. It's not just the retail stores, but he buys consumer brands that he knows are going to win. That's why he's been an Ulta investor. So he gets his stake back above 3 million in the second half of 2015. We come into 2016, big correction. I think he sold some shares there, not much though, and really just held most of his 3 million shares. And boom, he comes in. This is the March quarter beat that I wrote about for Bull of the Day. Gap up. The stock has never looked back since then, going from 160 up to 190. Has never looked down, and so here we are with a new gap today, and stocks above 230. This is showing 231. It's obviously been as high as 237. So the whole point of this is, do not fear new highs. You look at investors like Lee Ainsley from Maverick or Steve Mandel from Lone Pine Capital. They are what I call heads down picking stocks. They're not looking at the macro stuff. They're not looking at the Fed. They are picking quality companies that they want to own for 3 to 5 years. And Steve Mandel just wrote the playbook here for you on how to play a superior company like Ulta. We'll see if he's unloading more shares into these new highs. I would definitely be a buyer of Ulta anywhere, down to 210, if it even goes back there. Still a long-term growth story that has got some runway ahead of it. All right, thanks for joining me in the kitchen. I'm Kevin Cook.